Okay, ladies and gentlemen, welcome back to the channel. Welcome to our live stream. It is Christmas Eve. So, happy holidays, Merry Christmas, Happy New Year, all of that stuff. I hope that you and your families have the greatest week. So, keep in mind, obviously, the market is closed on Monday. So, if you are swing trading, options, whatever it is, just keep in mind you're going to be out that day on Monday. So just going to wait for some to filter into the live stream and then we'll go from there. I have the kids home this morning. They're staying home today. So, we just got some breakfast and, now just relaxing, digesting the economic data that just came out. You can see on the screen right here. That's what we're going to go over in a minute. We're going to go over the market reaction. And if there's anything that you guys want me to look at, any stocks or anything like that, you just let me know. All right. So let's get into it. All right. So at 8:30, this was, a pretty big report. A lot of people were looking at it, a lot of investors, a lot of market participants, a lot of algorithms, right? That's what trades these right off of the bat. That's why you see that big algo spike immediately before you even see the data. All you have to do is look at a chart to see if it's going to be good news or bad news. And then if it's going to be right in the middle, you'll see the market not really sure of what it wants to do. It could go up and then down and then finally find its way to where it was trading before the data came out. And in this case, it was pretty much as expected. So, not really a concern. If the numbers were really, really good or really, really bad, then we would have seen a much larger move. Whether that goes into the regular session or not, like our last CPI did not hold up, that's anybody's guess. But as far as the pre-market goes, the algorithms, just like us looking at the data, the algorithms are thinking the same thing. This is pretty much in line with expectations. All right. So the thing that the Fed looks at is this number right here, this 4.7%. The core PCE, that is what the Fed looks at. When you hear the Fed say that they want to get inflation to 2%, this is what they look at. This is their gauge here. So right now, instead of 2% target, they're at 4.7%. So that's where we're at. There's still a lot of work to do. Blah, blah, blah. We all know that. We know that the Fed is going to keep rates higher, right, for a longer period of time until they see this number really come on down. Now, it has come down a lot from when inflation peaked, right? So inflation has come on down. That's a good thing. That initial drop of inflation, that was the easy part. The tough part is going to be those stickier areas. And now going from 4.7, trying to get that down to 2% without causing a recession has never happened before. So, we'll see what happens. Thinking towards forward for next year, how we miss a recession, it's going to be very difficult to do. I don't know how it would be done without a recession, but we'll have to see, right? I like to be optimistic about the economy, people's livelihoods, right? I don't want to see people lose jobs, but the Fed, they've basically told us what they're looking for. They're looking for unemployment to go up, right? People to lose jobs and then prices to come on down. And that's just the way it is. So far, we haven't seen that. So that's where we stand right now. So that's the numbers that came out here, really as expected, right? PCE month over month, year over year, it's basically in line. So that's not really a big deal. Personal spending was down a little bit. That's a good sign for the Fed. And, it's not really that big of a difference. And same thing with the personal income ticking up slightly. It's not really that big of a difference. So, we're right in line here. So let's see what the market does, right? Durable goods, bad inflation news, good. Yeah. So good news is bad news. Bad news is good news. We all, are aware this is the way it is right now. But it is what it is. So let's see what the market reaction was. All right, let's go over to the SPY. All right, so this is what it looks like when a report first comes out. Um, it's very difficult to trade, right? So if you're trading, futures, you can get some huge wins, right? And everyone in our Discord at some point has had very big wins, but we've had big losses too trying to trade this. This is very difficult. So we saw the initial drop for whatever reason. Those algorithms, decided to sell the market off, and then it came right back up within minutes. I mean, this was just a down, up, and actually broke where we were before that. And now we're coming back on down. So, choppy to say the least, because this is not clear direction. During the last CPI report, where inflation was really good and it beat expectations, we saw a very clear direction, which is expected, right? This is not a clear direction. This is just coming in, basically, it didn't beat expectations, but it also wasn't worse than expectations. So the market is it's just kind of in limbo right now. So there's nothing much really to trade here in the pre-market. This you can't trade. I mean, how do you trade something like this? This is just way too choppy. Odds of you getting stopped out are so great when a chart looks like that. Simple as that. All right, let's look at the daily. I always like to start out on this. We always start out on this. We need to know where the 50 moving average is and the 20. Now, I'm going to go over something that is super important. You all know market sentiment, market structure is a huge deal. All right, I've gone over this so many times. So I just want to point out two situations here when we were oversold and when we were overbought. All right, so the oversold right here, this big green bar, we sold off in the morning, right? This was a CPI report that came in really bad, but we opened up and climbed the whole day on a bad report because we were already at the bottom. All right, so then we got back here and we finally broke out of this trend line that we've had all year long, right from the top of the year all the way down. We broke out of that and then came down when the market opened. That's because market sentiment here was already overbought. We were already overvalued here. Even though the report was great, we saw a gap up and then a sell-off. That sell-off lasted 4 days. So you guys got to realize, even with good news, bad news, it matters about market sentiment. That is everything. So where are we now? We're right in the middle. That's where we are. This is a tough place to trade. Up here, this is where we were taking puts. That's an easier time to trade. Down here, a nice bottom. This was an easier time to trade. Same thing with the summer. So now I want to show you guys something. Now that we know market sentiment, I want to show you the indicators that I use here and how I determine where the possible shift is going to be based on the 20 EMA and the 50 moving average. The 20 moving EMA here is this blue line. The 50, this cream line. What happens every time the 20 crosses under the 50? I'm going to circle it here. We got across there. We got across there, right there, and now this is coming. All right? These are starting to converge. If we get that cross, right, what we have seen in the past is a downtrend, 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 and possibly another leg down. That's just based on these indicators that I use. It has been a great pattern all year long if you know what you're looking at. And this is very similar. These rallies have been acting very similar. So this is the year of technical analysis. 2022 has been a perfect year for the technicals. Even with these economic data, you got to realize that the technicals here, right? Great news on inflation, we sold off for 5 days. Terrible news on inflation, we went on a 2-month rally. All right? It matters right now about valuations. If we're up here, the forward PE, right? The PE for the stock market is just simply too high. That's why you see the sell-off. Down here, the PE for the stock market, for the S&P 500, it was looking more attractive. We saw some buying. Also, the RSI plays a big part of this also. When you're oversold, the odds of a bounce are that much better. So that's what I started to look at on my watch lists here. I created a scan that's scanning for the RSIs to be oversold at 35 or less. That means that these good companies here, Ford, Intel, right? GM, Amazon, all of these stocks are at oversold levels. You can see here on the RSI, it hits my scan, and then I get to see where we can see that bounce. The RSI back here was very low. We saw a bounce. RSI very low, and maybe we can see that bounce. So me personally, what I have done is I set alerts, right? So we're at a very clear level here on Ford. So I got into some call options, all right? This to me seems like a lower risk, higher reward. We're at support. We're on a stock that did not break its June lows. So that's a good sign. But we are trending down for the year. So you got to keep that in mind. So right now, the RSI is very low on it. This is something that has the potential for a little bit of a bounce. It might take some time. So when I'm doing my options, what I've been doing is I've been taking out for longer, right? So I'm giving these a month to start to work instead of taking same week, a couple of days just to get a cheaper option. No, that's not great. So you can see here, you got these, excuse me, you have these crosses again on the 20. You can see where they cross, you have that sell-off, cross, sell-off, and then it starts to bottom on out. So that's what I'm looking for, this bottoming and possibly a breakout. If not, and we break down, then I just cut my loss and it's not a big loser because I'm getting in right here at the bottom. So that was that. Tilray, I actually did the same thing yesterday. During the day here, one day, this is where I got in at 271 is where I bought. And I'll show you guys here. And we're currently at, so at 271 here, you can see on my screen, this is where I bought Tilray, right there. And then we climbed on out. On the daily chart, and we're currently up 82 on that one, but on the daily chart, this is where we were back here. So this is support. This is where we saw a bounce. So you can tell I'm getting in low RSIs at resistance. I mean, at support. Looking for a quick move. That's it. I'm just looking for a quick move up. And you can tell all these have that same cross going on. So if you guys are interested, that's what I use, the 20 EMA and the 50-day moving average. Yeah, Brett, I think you did. That's a huge move. Huge move on Ford, right? Yep. But, it's not a huge mover, but it can give, if you take enough time out on your options, it definitely can give a little bit, because like when you're down here at 11, you get a small move up, right? Just a small move to 12.22 is 8% on the stock, because it's such a cheap stock. You don't need it to go, from 100 to 108. You just need, 50 cents to make that move instead of $8 on a $100 stock. So, that's what we're looking at right now. If anybody's interested in looking over anything, let me know. We got 17 minutes to the bell. And I'm just managing positions at this point. I'm still in my XOM puts as well. I got in those right here at resistance, this day right here, this candle, and then we saw a big sell-off down to 104s. All right, I could have exited here, but I still have 21 days on the contract. So I'm still looking to see if we could get a further breakdown. But if you were scalping something like this or trying to get out within a day or two, this is where you'd want to start to look to take profits, because you can see how this one trades in a range, right? It's trading in a range. So just so you guys know, that could have been a spot to get out. But trying to let these, move a little bit more. Still heavy in the green on XOM, because I got in right here at the 50 moving average. For me, this was a low risk, high reward setup. The same thing that we did with mRNA. We went over this a million times in the last couple of days, because this entry here for calls worked out perfect, right? And then on Apple, same thing. This is what I was looking at. The bounce here at previous support, got a great move in 2 days. Sold out of my contracts. Excuse me. But this is what we're doing. And I recommend in 2023, I really recommend, and I'm going to make videos on this, to set alerts. Get into the charts on stocks that move. You want to be in good names. You want to be in stocks that have a lot of volume, that have a lot of eyes on it. Stock picking is huge. Set alerts at either support, resistance, know the market sentiment at the time. Set alerts. If it goes off, then you can open up your platform and get into it if you want. All right? You could set 1,000,000 alerts. There's no limit. So you set alerts. If it hits, you could then see where the market's at, because some of our alerts don't hit, for a week, a month. So you want to make sure you're in the right market at the time. But if it hits, then you could get in there and do what you have to do. But I recommend that, I think, more than ever coming up in 2023, because this is a trader's market. Look at the movement. The movement every day is so crazy. It's so wild. And this is a time where you can make some money. And in 2023, that's what we have to do. Set those alerts, get good entries, good risk to reward, and just let the position pay you. All right. Thank you, Brett. Yeah, it's been a slow climb, but we're almost there. Still a long way to go on this channel. Just started these live streams, trying to drum up some interest. If anyone actually is paying attention, We know our technical analysis. That is very clear. So, if you're a technical trader, this is definitely the channel for you. If you're, you know, one of these uh, YOLO rocket ship type of 2020 2021 traders, it's probably not the right channel. All right, simple as that. We're trying to make money for the long term. We're here for the long term. This is not a get rich in one day. This is a long journey, and that's what we're doing. There's no rush. The market is not going anywhere. So just take it easy, take it slow until you start to hit your stride. You hit your stride, then you start to level up a little bit. And it's as simple as that. All right, so I went off on a tangent there, but we have 12 minutes to the bell. I think that this is a good time to end the stream with saying happy holidays to you guys. I hope that you guys have a great weekend. I will be, in our Discord if you guys are interested, probably posting some random things, and then, just enjoying the next 3 days. So hit the thumbs up for the video, and I will see you guys.